Hello, I'm Liz Lumley of Finextra, and we're here at Sibos in Boston. And today I'm speaking to Jennifer Boussuge of Bank of America Merrill Lynch, and we're gonna talk about a lot of issues going on in transaction banking. Now, I haven't had a conversation with many people this year that hasn't mentioned the term collaboration. It seems to be the buzzword of the moment, sort of either internal collaboration or collaboration with partners or other banks. So I'm going to ask this question of you: what does collaboration mean to Bank of America?
Well, I think ultimately collaboration means working with the best and the brightest in the industry to make sure that we deliver leading edge services for our clients. And I think that, throughout the financial services industry, we've all come to the realization that we can't be all things to all people. It's just not practical in terms of cost and time and efficiency, and that's not what we aspire to be. And we all have our own strengths that we've built up over time, where we don't necessarily compete, with one another. So it's really kind of finding how do we come together, how do we collaborate to be able to fill out our offering of services across the globe and fill out those global capabilities, for our clients to make sure that our client set is getting the best of what's out there. The other thing I would say on the collaboration front, though, obviously we're here surrounded by financial institutions, and much of it is that financial institution collaboration, so helping each other in either jurisdictions or in product areas that may not be our strong suits. But I think it goes beyond that, outside of the financial institution space, and looking at other third-party providers. You have so many entrants coming into the space, especially the payment space,
Exactly,
that
yeah.
are not traditional financial institutions. And I think in the conversations I've had while I'm here is coming to the realization, if we don't start collaborating with them, they may move very quickly into a space where we become less relevant. So making sure that we're staying on top of who they are and how we can collaborate with them and bring them into the fold as well.
So I'd love to keep talking about collaboration, but I'm afraid I have to talk about another word, regulations.
Yes, our favorite topic.
Maybe we're at peak regulation, I'm not sure, but have you seen the regulatory environment, have the dynamics shifted a bit recently, or?
I would say, honestly, I think that the regulatory environment, or what banks are having to do to become compliant with regulation, it's the new normal. I don't see it changing anytime soon. And I think, part of that is especially for global banks that operate in a number of different legal jurisdictions, you've got the different regulators that are playing catch up with others. So for example, you have the U.S. regulators who have put through a whole body of regulation that the U.S. banks have complied with, but now you have situations, especially in the payment space, where you've got the European regulators now trying to come up to speed or to harmonize with some of the U.S. regulators. So I think we in the financial services, and who after that, it may be the Asian regulators. So I think it's going to be a continual realm of regulations and bringing harmonization across. So I don't see it changing anytime soon. So I think it's just how we adapt to that, and also sometimes trying to find the silver lining in the regulation instead of always looking at it like it's this burden. Finding, well, I think SEPA is a good example of that within Europe. I think a lot of people looked at SEPA like, oh my goodness, we have to be compliant with this, the cost and burden. But how does it make us rethink about payments and what we're doing, and where does it open up opportunities that maybe weren't there before on the receivables side, because now all of a sudden this standardization is being forced. And I think in some cases you need a regulatory body to push that.
Yeah.
So.
Oh, that's interesting. I agree with you. So, of course, in your first answer, you brought up clients. So I'm looking at the changing demands of the corporate treasurer. How is the corporate treasurer different today from, for example, 5 years ago?
Yeah. It's a great question, and again, one that we've talked about a fair amount at the conference. I think that the role of the corporate treasurer, and I'd argue for the entire treasury team within corporates, has changed and shifted. I think it's gone from being, dare I say, a utilitarian or a functional type of task-oriented job to being expected to be a value-added role. So I think that the firms and the businesses are really looking to the treasurer and the treasury to say, how can you help the business? What can you do? What types of the way you run our treasury can actually help us service our clients better? our end users and help the businesses be more efficient and effective. So it's not just, you know, doing the reporting, going through the processes, but it's where can really Treasury add value. And so I think that's been interesting for us as financial services providers, because it's opened up a much more strategic type dialogue and conversation about how can we then come in and help them be more relevant and add more value for their end users and their clients.
Excellent. Jennifer, day 4, thank you very much for this.
Great,
Thank
thanks.
you.
My pleasure.